as soon as you get a major country like Russia, and Russia is now the fourth or fifth largest economy by purchasing power parity in the world. I mean, it's grown despite all the supposed troubles and us saying, oh, they're really bust and Putin's going to disappear up in a sort of cloud of economic crisis smoke. I mean, they're getting Russia so wrong. It's just absolutely incredible. But Russia could go on a gold standard tomorrow. China could probably do so as well. I'm not necessarily going to make a judgment as to whether they'll do it properly or not, but they could do it. That's fine. And I think that they will do it to protect their own currency from a collapse in our currencies. And I do see that collapse developing actually quite rapidly now.
Russia, the world's third largest gold producer, is increasingly leveraging its position to influence international gold markets. Recent reports highlight Russian interests control significant gold assets across Central Asia and Africa. While the exact size of its reserves remains undisclosed, a Moscow vault is believed to house substantial gold holdings. These reserves are used to balance the budget, but Russia is unofficially trading gold for hard currency, weapons, and foreign goods. This practice has created a new gold trade network connecting Russia, Africa, the Middle East, and China. Alasdair Macleod of Macleod Finance notes that Russia has defied Western expectations of economic collapse, continuing to grow despite sanctions. With its expanding influence in gold markets, Russia could feasibly adopt a gold standard to fortify its economy. Similarly, another major player, China, has quietly amassed gold reserves. However, China's approach reflects a calculated strategy, avoiding actions that could destabilize Western financial systems or draw blame for global economic disruptions. Instead, China benefits from Western missteps while focusing on safeguarding its currency. This cautious stance aligns with broader efforts by China to reduce reliance on the US dollar. As a key BRICS member, China is actively promoting the use of the yuan for cross-border transactions. Reports reveal that 40 countries are being courted to adopt the yuan over the dollar for trade. The results are evident. The yuan's share in global trade settlements surged to 4.6% in 2024, compared to just 2% in 2019. This growth signals the rapid rise of the yuan as a credible alternative to the dollar in international markets. Meanwhile, political tensions in the West are escalating. Former U.S. President Donald Trump recently reiterated his intent to impose a 100% tariff on BRICS nations, retaliating against their de-dollarization efforts. The move underscores growing U.S. concerns over the bloc's influence and its challenge to the dollar's dominance. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Look at it from the point of view of household savers. Household savings are roughly 30% of GDP. Now, that amounts to around about 2.5, 3 trillion. I can't remember the exact figure. It's a little while since I worked it out. Let's say roughly $2.5 trillion worth of savings a year. Mm-hmm. Now, in the past, this has been funneled into property. That balloon has puffed and gone. So that's really no longer attractive to the Chinese household. The stock market, well, that's difficult. There are times when it's nice and most of the time it's not nice. So the principal savings medium that they have are bank accounts. And what they will do is they will accumulate 3-year deposits, which, as we've just seen, interest rates have been reduced. So what do? I mean, a lot of the banks offer gold accounts. I mean, this is a sort of, really what you're talking about. So what we're seeing, I think, is we're seeing a lot of these savings being redirected into gold. The Chinese citizen can't go out and buy foreign exchange, even if he wanted to. The yuan has been pretty weak against the dollar. So they would be looking for hedges, if you like, of one sort or another. And I think there's a greater understanding in China that gold is money and the rest is credit. John Pierpont Morgan put it in 1912. So, I mean, this doesn't surprise me at all. It's completely in line with my information about what's going on in China, what the savers are doing. The facilities offered by banks, I mean, a lot of banks offer gold accounts. And it's really quite simple for, a Chinese saver to move their savings from bank deposit into gold. Yeah, sure. I mean, they've already got something like 27,000 tons of gold. I'm talking about the private sector as a whole. And I can see them adding to it. The state has also got a lot of gold, which it doesn't admit to. Because it's been accumulating gold ever since the People's Bank of China was appointed to do that back in 1983. And I think that a lot of the gold that went out on which was leased and then sold into the market. Proceeds then applied to U.S. Treasuries. It was the original carry trade back in the 80s and 90s. A lot of that gold, I think, has been bought by China. I wouldn't be. I mean, I think they've got at least somewhere between 20 and 30,000 tons, and I think the states probably got more, even more than that, hidden around, the People's Liberation Army accounts, the youth wing of the Communist Party, or they've got lots and lots of places they can hide these things away from the PBOC's balance sheet. Because one of the things that China doesn't want to do is it doesn't want to undermine the Western financial system. It doesn't want to take the blame for it. If anything, you'll see that China has actually done very, very little in terms of action. It's got where it has basically by us making mistakes.
According to Alasdair Macleod, gold's upward trend does not reflect its value increasing but rather the decline in the dollar's purchasing power. Key factors driving this include mounting U.S. debt, rising interest rates, and economic policies under leaders like Trump, which could further accelerate the dollar's decline. President Trump's bold economic policies have reinvigorated the bullish outlook for gold. His aggressive trade measures, including proposed tariffs and withdrawal from international agreements, have heightened inflationary concerns and created ripples across global financial markets. These moves have amplified gold's appeal as a safe haven asset and a strategic hedge against inflation. Trump's initial policy actions, from imposing tariffs to immigration reforms, have reshaped investor sentiment. As these policies increase uncertainty and pressure on the dollar, gold's role as a store of value becomes more prominent. Historically, gold has served as a reliable hedge during inflation and economic instability, and the current environment is no exception. The combination of Trump's policies, rising U.S. debt levels, and higher interest rates has created a perfect storm for gold investors. With inflation concerns mounting and confidence in fiat currencies waning, gold is solidifying its position as the ultimate hedge against economic uncertainty. This pivotal moment underscores gold's enduring importance as a financial haven and a response to global economic shifts. Let's get back to the interview.
I mean, if you look at what happened last year, it rose in dollar terms by around about 25%, which actually, put more accurately, means that the dollar went down by that amount. Because gold's purchasing power, while it does fluctuate, it doesn't fluctuate much in terms of commodities, in terms of goods and services, wholesale goods and services in particular. We'll take the sort of retail variations and stuff out of it. I mean, this is, documented all the way back into Roman times, that the purchasing power of gold has basically been more or less the same the whole time. What we're seeing is not gold rising, we're seeing our currencies going down, and that's the big, big lesson which everybody's got to take on board. Everything we do is credit. We do not deal with gold. We do not settle things in gold. We can do, but we don't. And the reason for that is we'd rather hold on to our gold and deal in credit rather than, so what we do is we hoard the gold. And if we're not worried about things, we don't need to hoard very much gold. I mean, the Swiss nationals didn't really bother holding gold. I don't know, they've probably got a bit more now, but because the Swiss National Bank held sufficient gold reserves to give everybody confidence in the currency. So you don't need to hold gold. The reason that people are accumulating gold, and particularly foreign central banks, and also the Bank of China, is their trust in fiat currencies and its future purchasing power. That trust is going down. I mean, they're adjusting their reserves for the risk that they see in fiat currencies. So when you see the Bank of China buying gold, they're not really buying gold. What they're doing is they're getting rid of fiat rubbish, dollars and euros. So I think that's the way you've got to look at gold. It's actually, it's sort of within $30, $40 of its all-time high. If you want to trade it, I suppose that's something that really matters. But given that really the decision you should be taking is, do you want to hold credit or do you want to hold gold? And in what proportions, the so-called price is actually immaterial. It's not gold going up. I expect the dollar to continue to decline. That is the key, Danny. So do not think in terms of gold going up. It's the dollar going down. And as far as I can see, President Trump, God bless him, is going to accelerate the decline in the dollar because, they're already in a debt trap. Interest rates are going to rise. Bond yields are going to rise, making the debt trap even worse. And confidence in the dollar. What does the Fed do? When this bubble pops, and they always pop, okay, what does the Fed do? Does it look after the dollar? In other words, raise rates to protect the dollar and keep it some sort of trading level against gold? Or do they do what their mandate is? And that is to basically try and rescue everything in the economy. Your call.
Yeah, I'm betting on the second option.
Well, I think we all are. We know that under those circumstances, that is basically what the Fed has to do. I mean, otherwise, it's just absolute bloody chaos. And it's not just a question of protecting the banks. I mean, the banks are going to have huge, great write-offs, certainly from small and medium-sized businesses. But when it comes to the larger corporations, which also have political lobbying clout, you can see, oh, hold on, we've got to rescue these guys. We mustn't allow them to go bust.
As nations like Russia and China expand their gold reserves and reduce dependence on the dollar, the balance of influence in international trade and finance is transforming. These developments challenge the dominance of fiat currencies and highlight the growing role of gold as a stabilizing force in uncertain times. With geopolitical tensions rising and inflationary pressures mounting, the race to secure economic resilience is intensifying across the globe. What long-term impact could these strategic shifts in gold reserves and currency dynamics have on the global financial order? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.